Thank you, everybody, for being here. Today, we have a special guest, Mary Gwak, the lawyer's title. She's the top
Stop it.
sales representative for title insurance, not just in her office, but in Orange County and California in the United States. She's like the best of the best. And I'm saying that because I'm biased, but I know that her numbers also back that up. Anyways, she's here to talk about what title insurance is and how it affects us as realtors, and take it away.
Thank you. Good morning, everyone. When I start teaching about this class or talking about title insurance, it's typically not the first thing that I talk about, like even in an office that I'm brand new in, because I've found that the tendency is most of my clients want to just jump into production, right? They're not really thinking about the back end stuff until you have a transaction. But one of the reasons why I think there's such an importance, even when you're new in the business, you're not going to understand 100% of it. But to have a general idea of how all the key players play in your transaction and how everyone comes together, who does what, to have a general guideline of that, it's going to make you so much more confident when you're speaking to your clients, right? So first and foremost, I always introduce title insurance as a very unique product to the United States of America. It's not something that's available in other parts of the world. Canada's got their form of title insurance, and even within the United States, it does vary from state to state. The policy itself doesn't vary, but the way in how it goes, how title insurance plays the part is a little different from place to place. But first and foremost, title insurance, we are an insurance company. We have a product, right? That part's kind of boring for most of my clients. So the way that I start off is we'll spend a couple minutes talking about what we do and how we do it to help you guys. So I'm 100% commission only, just like you guys. I spend 90% of my day that is non-revenue generating for that each task, right? So all of that is to procure business, just like you guys, exactly like you guys. You can have 52 open houses in a year, one a weekend, and there's no guarantee, right? But there's a ton of stuff that we do, you do, in order to establish relationships with clients. And one of the things that title insurance companies do in California is we have become kind of the business development leg of the real estate agent's business. So our biggest expenditure as a company is the data that we buy. So we buy, you guys have had all different forms of farm packages that you've ordered from me. We have to have that data. We're not buying it to make you farm packages, because that would be against the law. That would be a RESPA violation. That would be a violation of the Department of Insurance. But we have to buy all that data in order to insure, right? So we're not going to go to the library each and every time somebody opens an order and do the research. So in order for us to do the research, we have all the data available. So we package that up and we share it with our clients or our prospective clients so that they can get into business, right? So that's the number one thing that we do. Number two thing that we do, and the way that you guys should be utilizing your title partners is, again, it's business development. So I call on a lot of offices. I mean, I know I spend a lot of time in here, but if I were to really like sit down and look at my book of business, it's probably about 85 companies and about 1,200 agents within those 85 companies, right? So one of the things that you guys can rely on me for is, you know, what's taking place in the market, what's working, what's not working, what are people doing? There's no secret to this business. I don't, you know, readily, like, I have some clients that are very private and I would never give away any of their stuff because of that. So I'm very, very conscientious of that. But then there's clients that I am very well, I'm given permission to flaunt what they do because they don't believe that that's any sort of a risk for their business, right? So you utilize us for information. There's not going to be anyone in your transaction that does as much business as a title company. not even a lender. What we mean by that is on any given day, a title insurance, like my office is lawyer's title, and I'm out of Orange County operations. So on a daily basis, we open anywhere from 75 to 125 orders a day, right? So we kind of have a grasp of what's going on. We follow trends and see what's happening. Yes.
I'm sorry, I just want to ask, so you insure 75 houses a day?
We open 75 on average. So we open an order, and then the lifespan of an order is anywhere from 30 to 45 days, depending on how long an escrow is, right? So just like you guys, we don't get paid when we open. So I look at opens and closes, right? The opening is what's future business. And then the close, if I get my closed order notification, if your escrow closed today, you get your commission check tomorrow, I get my commission check tomorrow. Yeah, that's a great question.
But openings don't always calculate or coincide with closings, right? Because you might have more openings that don't match the same number of closings for that.
That's right. So the way that I'm kind of graded, if you will, by my company, they always look at, especially with senior reps and veteran reps, they look at our open and close ratio. Because there's reps out there, not as much at our company, because we have a lot of like older veteran reps, but there are title companies out there. They'll literally, like, if Richard didn't, if Richard allowed everybody to walk through the door, they would walk through the cubicles, and if they saw you writing an offer, they'd say like, oh, 123 Apple Street, let me open that order for you. You haven't even given them a green light, but they're gonna open that order. So people like that will have like a 40 or 50% close ratio. Like I've never fallen before 90, the low 90. So if I'm opening something, unless there's a legitimate reason, if I couldn't close it, nobody else could. So that's one of the ways, right? So my company eats that difference because there's actually a cost to doing the business, right? So we are fronting that money. When an order opens, we order what's called a preliminary title report. The going rate right now for a prelim wholesale rate is $600. So whether or not we insure you, my boss cuts a check for $600 every time we open. And that's okay, but that's one of the reasons why they look at the open and close ratios. So what does a title insurance company do in a transaction? We basically are the research engine and we're the money movers. So if there's anything that you take away from today's class, keep that in mind because it will allow you to be more eloquent and confident with your clients. So for both the seller and the buyer, we're eliminating risk by doing our research. So some people who are a little callous and like to give me a hard time, some of my veteran agents will say, well, it's just a junk fee. You guys insure your own work. It's like, well, yeah, we do insure our own work, but there are things that we miss. So one unique thing about title insurance is when there's a claim, it's not like auto insurance or medical insurance, right? Because auto insurance, you could have had an uninsured driver knock off your bumper. Yeah, that's going to cost you $70,000, right? But with title insurance, our claims, like today's average claim is over $250,000. And I'm going to give you kind of an idea of what the policies cost, what we're making on the front end.
There's also things that the previous title company might have missed,
Correct.
right?
Correct. That's a great question. It doesn't matter if they missed it, whoever insured it last eats it. So let's say that Sonia's property goes into escrow right now. The last sale, let's say, took place 5 years ago. First American insured that. Now Sonia got the listing, she opens it with lawyers. And in our research, we find out that there was something wrong. There's a cloud on title. If we don't close it, we can go back to First American. But let's say that we missed it too, but it was first missed 5 years ago, right? With the policy, we still need it. So if there are some gray areas, we go back to the prior company because we do know who insured it last. And we say, what was the reason for insuring this? You guys have backup. So that's part of the process of eliminating risk that we do. So like I said, it is not a a cheap claim for us. When we have a official claim, it's usually for the entire sale amount, or at least half of it. The most common claims will be for missed heirs and owners. What that means is a property has been, let's say it was built in 1945. It's 2025 right now. But let's say somewhere in the 70s, somebody missed an owner on the chain of title, and they never got his acknowledgement. He never got paid. Let's say that it was, a division amongst 4 grandchildren, and 3 of them got paid, should have been split to 4, but it was split to thirds, because they missed that one person. And that guy finds out in 2025, he can come back and sue the title company. With no title company, he would be going back to sue all the owners. And that's where we say where title insurance is a partner for the community. When you get title insurance, the seller is relieved of future obligations. The agents are relieved of future obligations, and the buyer goes home knowing that they have an insurance policy. So I always use this analogy because I'm Korean, and I've seen this personally with my family in Korea. They have a very different version now. It only started in the last 4 or 5 years. But about 17 years ago, my cousin, who's pretty affluent, she was living abroad. She had a high-rise condo that she had bought, like this is 15 years ago, but she had bought it for like 800,000. So it was a lot of money. She had bought it. Most of the transactions in Korea at the time were all cash. She paid all cash for it. And then she had a tenant in it. And she came back from living in Hong Kong for several years. She came back and she found out that somebody changed title. She was going to sell it, but she didn't own it anymore. She didn't own it anymore, right? Because without title insurance, and it's like that here too, anybody can go record anything. I can go right now and I can look up Richard Moore's address. I can create a grant deed that basically says Richard Moore grants it to Mary Gwak. The county does not look at Richard's signature. They don't look at anything. All they care about is that I have the right document, that the notary has a non-expired license. I pay them my $75 recording fee, and guess what? Richard's house is in my name. But if that happens, Richard has title insurance here. In Korea, there is none. So my cousin ended up having to hire private investigators, forensics, handwriting forensics people, and then had to investigate the county workers because it was like the county workers were in cahoots, because somebody had a fake ID. None of that would happen here to that extent. The forgery happens here all the time, but it's not an issue because there's title insurance company, right? So I'll give you another example. Let's say I did that on Richard's deed and his property was now vested into my name and Richard goes to sell it next year. They would look at it and they would say, well, yeah, this wasn't him. And he would say, no, that wasn't me. If I pretended to be the seller because of that deed, right? And we see this all the time. They say, okay, this Richard gave this to you or sold you a $2 million property for $500,000 or as a gift at 0. We need Richard Moore and Mary Ann Moore one more time. So we do what's called a confirmation of conveyance. We go back to the person that deeded, we look for them, and we say, on March 22nd, 2025, did you execute this deed, given it to Mary Ball? And he would say yes or no. So all of that research is the type of research we do. So ownership research is one of the biggest things that we do. It's one of the most costly claims that we have. Like I'm dealing with one right now where husband and wife own the property and the son came out of nowhere and says, well, mom and dad are dead, so I'm gonna sell my property, I'm gonna sell their property. Well, that's all fine, but it has to go to probate, right? So it's up to us to make sure that we're not releasing all this money to this one son. We need to see in the probate paperwork from a judge that says, no, they have 3 kids. And the signer is him, and him. Because this guy just came out and said, oh no, I'm the signer, I'm the oldest son. Well, that's fine. But what you tell me and what the records show could be different. So that's all the legwork that we do. If there is none of that, going back to like certain countries like Korea or the Middle East or China, that would be up to you as the buyer. You would investigate. You would say, okay, is the seller really legitimate? You know, he says he lived here 7 years, so
It's expensive.
it is expensive and it's really nerve-wracking, right, when you think about it. So let's say on a $1 million property, you're the seller, Carrie, of $1 million property. Sonia's gonna buy your property for $800,000. Or excuse me, $1 million, she's gonna get a loan for $800,000. In the transaction, we would have 2 policies. One policy, Carrie would be buying for the benefit of Sonia, the buyer. A policy to insure her up to $1 million. Even though she only brought in $200,000 in cash as a down payment, you're gonna insure her up to $1 million for the sales price. That insurance policy is gonna cost us roughly, that's gonna cost you roughly $2,700. And Sonia, in return, needs to get a policy for her lender, Bank of America. Bank of America wants to make sure, because there's no guarantee that the title claim is only gonna be $1 million, right? Because title issues could come up 5 years later. So you sold it at $1 million, by the time she discovers it, the market value could have been high, and if there's a payout, everybody needs to recoup their own money, right? So Zach, the Bank of America banker, wants to know that his $800,000 he's lending is insured. So Sonia would buy him a policy and she would spend roughly $800-900. So there's 2 beneficiaries in that transaction. First beneficiary is the buyer, new owner. Second beneficiary is Bank of America
And is that policy for the whole million as well, or just the?
for the loan amount.
Okay, so
Yeah.
800,000.
Yes, yes. And the main difference is not just the money, but now it's making more sense to me because we're in such an insurance crisis. It's 2 different beneficiaries. Sonia gets a check in Sonia's name for her loss. Bank of America gets a check in their name for a loss. It's one of the big things that we're going through right now in our industry is insurance, right? With homeowners insurance. And it's like, okay, if I bought my home and I told farmers that I own the house as Mary Gwak, but my house burns down, but my property is now in the name of Mary and Carlos, farmers isn't gonna give me 100% payout. Because they had Mary Gwak as the beneficiary, right? So that now, like, to me, it makes more sense, because I'm like, why did they need to name it completely separate? But it's literally 2 separate policies. 2 to 3 weeks after the transaction closes, Sonia gets a policy from us. You, for 200?
For 200, my down payment?
No, you get it for $1 million.
Oh, I get it.
You
But
get
their payout would be 200, right? And then-
No.
And then the bank would be 800.
No, her payout would not be 200. Her payout would be a minimum of $1 million.
And
But
then
then
give
she
him-
pays the bank
No,
with that?
no. Because our title policy is not just financial, right? It's not just the dollar amount she put in for the homeowner who's purchasing it. For him, it's just the dollar amount. But for the homeowner, if somebody comes 5 years later, right? They come 5 years later and you bought the house at $1 million, but the house is now 1.5, and there was a third of an owner missing or half of an owner missing, right? It wouldn't, your $1 million wouldn't be enough. We're supposed to make you whole so you don't have to get kicked out of your house. We're not gonna cut you a $200,000 check, say here's 200 plus interest, now see ya.
Yeah, but my question was, like, let's say her house burns down and she still owes the bank. Out of that million, she'd pay the bank wouldn't get like a separate payout, right?
Are we talking about title insurance or fire insurance?
So, yeah, we're talking,
Yeah.
okay, sorry, that's
Yeah.
right, that's right.
Yeah, no, for
Yeah,
title
so-
insurance,
So for, let's say if someone comes back and says, this is my house,
yeah,
and you guys missed it for some reason,
Yeah.
and then she's getting paid the whole million the purchase price.
she's
And then
getting
she's
paid
responsible for paying the mortgage, right, out of that million that she gets?
for a fire?
No, for the insurance or.
No, she's not responsible for paying his, no. Because our idea, whether she decides to stay or go,
Yeah.
our thing is not necessarily to cut her a check.
Mhm.
Our thing is to, like, in the case of, let's say, missed liens or missed owners.
Yeah.
We have to pay them off to leave her alone, so she can stay in her property.
Okay,
You know what I mean?
I get it.
Yeah, so like with fire insurance, it would be different because it's like, okay, there's $800,000 in damage. We're gonna cut you a check for 800. Maybe she only fixes 300,000 or whatever, but we cut her a check. But with title insurance, our entire promise to the consumer is that your property is marketable and it's intact for the life of your ownership.
That's why you do all the research, because you don't wanna have to do that.
That's right, that's right, that's why we
Lose
do,
money.
yes, yes, and so we are in the business, we are literally ensuring our own work. Right, but people make mistakes all the time, all the time. And when we make a mistake, we eat it and we pick up the cost, like, so that's a legitimate claim. But on an annual basis, we pay, I would say roughly $50 to $75 million a year as our parent company on non-claim payouts. What do I mean by that? Non-claim payouts are where a consumer comes to us and say, hey, you guys closed my deal a year ago and this is still here, right? It's cheaper for us to cut the check and pay the lien off or pay the person off than for us to go through the whole claim process. Let's say it's a $9,000 judgment or lien that we missed, right? Because we didn't pick up on it. But now the new owner went to go do a refinance and it popped up. And their property's not marketable, because our insurance to the new owner is your property will be marketable. Lawyer's title stands behind it. So if there's a $7,000 lien, we're not gonna make it go through the claim process. They're gonna review it and they're gonna cut a check. We do that all the time. Now, one thing I will say, and I always use this as a disclaimer, not that you guys would, but I have encountered misunderstandings about what that means to pay a claim. We do not pay off if someone is a crook or a thief or a liar, right? So we don't see it as often, but back in the foreclosure days, let's say that we did make an error, but if we can prove that you knew and you weren't forthcoming, because you all sign paperwork as consumers, that you don't know of anything else, right? So if you knew that that wasn't the right figure, I've had examples like this. There was a transaction that we closed. There was a supplemental property tax bill that the seller had been given. And we found out after the fact that they had been given it, after it closed. But it was some sum of like $18,000. After it closed, we discovered it. And everybody called us. And we found out this guy was basically trying to defraud us, right? So we only paid what was showing of record, but that's the other thing, title insurance, we're in a rat race for time and date, right? So if we close today and there's a recording today, we're on the hook for it. But that's the reason why we tell the consumers under penalty of perjury, you don't know of anything else. Because what typically happens is nobody records anything until they've notified you. Right? You've been notified. So the county notified them. Hey, we sent you this first one of 8,000, but there's actually an additional 30,000. So he never told us about the additional 30,000 letter he got. And his argument to us was, well, you guys insured me. It's like, yeah, we insured you, but we're not paying your bills, buddy. Right? So just because you have insurance doesn't mean that you get to dodge the bullet, but it is our job to go and find everything of public record, everything reported. But I will say, if it is our responsibility, we will always pay. but you're gonna have no other entity more than lenders who has harder, more expensive, more affluent lawyers than a title insurance company. We are not in the business of getting shafted. So some of the people that think like, oh, I'm not outsmart them, you know, like I'm not gonna pay, I have one right now. The property, the Carlos will appreciate this, you guys may not be able to see the big picture, but a preliminary title report is our intent to insure, right? That's what we give to everyone in escrow. And normally a preliminary title report will have from, I would say, a minimum of 10 items. And most of the 10 items are all normal things. You know, it's property taxes, CCNRs, there's one loan open, there's a utility easement, that's usually normal. But this one has 145 items. It is a big property, Roscoe's Chicken.
Yeah.
So it's a Roscoe's Chicken in LA, and the biggest lien on there is $16 million, right? So there's a lien for 16 million against the owner. So with something like that, we know that it's 16 million. We're not gonna close on it just because the owner says, yeah, go ahead and take 16 million. Because you know what? We need to contact the attorney to see if there's anything back end of it. Because that lien was recorded 18 months ago. So all of that kind of stuff is the pre-work that we do. But even with that, we have a certain gap and a certain amount of inherent risk that we take. So that's kind of the insurance part of it. We are insuring the new buyer that all the owners that have been on this property, whether it's your current seller or all the historical owners, all have been paid and will be paid. That there is no missing errors is what we call it. That there isn't someone that we missed. Because it does happen from time to time. Let's say that the three of us bought a property. Carlos, Carrie, and Mary, we were original buyers. And then 3 years later, Carrie adds her husband. So the purchase deed was the three of us. And then Carrie adds her husband. But when she goes to add her husband, it's not that her deed is faulty, it's just incomplete. Carrie executes a deed that says, I hereby grant and add John Park. So it's Carrie and John Park. And somebody misses the old deed, she goes into escrow, they forgot all about us. Because her deed was last recorded, that happens all the time. And that's where I say, you guys need to look at property profiles. And you need to be able to understand that.
So if somebody adds somebody to the deed, aren't they supposed to notify you and the other person, so you could say no or yes or?
Not necessarily, they should. Like if I'm ever preparing or helping someone do a deed, I will prepare it where all three of us are acknowledging. But the reason why Carrie, it was still an okay document is because she's giving her marital asset. But that last recorded deed, all it makes it look like is, if that's the only deed you looked at and you didn't look underneath, it looks like the owner was Carrie, because it just says Carrie Park hereby grants to Carrie and John Park, wife and husband, as community property, right? So they go into escrow and then we say, well, wait a minute, where's Carlos and Mary? They're the ones that bought, we don't even see them deeding off, they only came on, right? So that's part of like doing the research, but even prior to a transaction, that's why it's imperative that you guys do your research. Do not rely on realists. Nothing wrong with it. I don't have anything against it, but you have to learn to understand the chain. I've had so many agents, even agents with experience, they'll go into a listing appointment like that. Literally, didn't see that Carlos and Mary were even on title, and they'll go with the listing agreement executed for the two of them, go into escrow, and we're like, well, where's the other two owners? It happens more than you guys would believe. It happens very, very commonly, and I have to be very diplomatic and very businesslike about it, but I have clients that, have sold 75 homes in the last 2 years, and we're in escrow, and like, bro, who who's Carlos Rodriguez? He's your owner. What? No, he's not. It's Carrie and her husband. No, it's
Where else can you live besides realist?
property profiles, no, through us. Property profiles. The reason why I say through us, you could do it through Realist, but you'll pay per page. We'll give you deeds complimentary. Right, so we will tell you. So that's one of the most common things that we do as a service in our office, whether it's through our website or through my customer service. We have an entire team dedicated just to pulling deeds. So on a daily basis, I personally send out probably like 30 to 35 requests. So I'll give them an address. Hey, I need a property profile. Can I get all the vested owners' name? So some of my really good clients, that's the routine we're on. If they get a call for a listing appointment, they just call or text me and they're like, hey, get me all the vested owners for 123 Apple Street. Vested owners does not mean who's the last recorded grantee. Vested owners means who are all the owners that need to sign. So in this case, if you ran that, the vested owner would be the three of us plus your husband that you recently added. But if you just said grantee, it would just be hers. So the ownership is the primary thing, and then missed liens, right? So when we use the word liens, a lot of times people get very intimidated or think that it's only bad things, but liens are actually mortgages too. So by technical definition, mortgages are liens. So when we do the preliminary title report, it is our intent to ensure based on these findings. So we are basically disclosing what liens need to be cleared up. And we will help you clear them up. We're not doing the clear up work for you, but we will help you clear them up by asking for the right paperwork and by moving the money around, right? So let's say that there was a IRS lien under my name. I'm the seller, there's an IRS lien. Carlos is the buyer. Well, he wants to make sure, if he saw that on the prelim, he wants to make sure that that lien is actually gone. Because IRS lien supersedes any lien. And it stays on there. So if we missed it, that would be a problem, right? So he's buying a property as a buyer. He wants to know how's this going to be taken care of. So escrow would contact the IRS, give them the social security number, give them all the information, my authorization, and they would say, you have a lien placed on my client's name and home. What is the current payoff? So the lien says, let's say 200,000, the IRS could say, well, that lien was recorded in 2023 after penalties and fees, you're at an additional 18,000. So they give us a dollar amount. And they say, this dollar amount and our offer to accept your money is good until, what's today, the 20th? It is good until April 20th. So we have that, right? Then we as title use that letter. And if we close on 18, we send the IRS their money and their penalties and their fees attached with that letter. Release our lien. So now what happens? If there's no title company, who's going to trace that release? With us, we're basically saying, because we're not paying them at first, right? Because remember, that money is coming out of the seller, my money, my proceeds.
And say where's that money coming from?
Right, so it's, and I never encourage people, sometimes you guys are gonna get sellers that are trying to be helpful or think that they're smarter than the rest of the industry, and they're like, oh, well, I just went there and paid it. Do not go there and pay it. Because if you go there and pay it, we can't insure. We need to cut them the check. We need to track that check, right? So we have the money at the close of escrow. We release the file to record. And at that time, lawyer's title is basically saying, we're gonna hold this lien, we're gonna pay the IRS, and they're gonna give us a release. So we're on the hook for it, right? We don't know. I mean, if the IRS blows up, maybe there is no release, but then we're on the hook for it because we move the money. So that's where I'm going into the second layer of what does title insurance do? Your consumers don't realize that all of the important big sums of money is not escrow. It is title. The only reason why escrow would handle all of the money, and even then, I don't recommend it, and I'll explain that in a bit. If the seller has no outstanding loan, and the buyer is buying all cash, let's say, no lenders involved, clean free loan, no liens, the seller owns the property free and clear, Carrie is the buyer, she has $1 million to buy the house. Somebody could suggest that you just go through escrow. You're still gonna have a title company, but they could suggest that she wires the money to escrow. I wouldn't. What I encourage my clients, especially as buyer's agents, if it is a large sum of money, always use a title insurance company. You already have title insurance. It's not that there's no title insurance in this transaction. When there is, if the seller has a current mortgage, and if Carrie is getting a new mortgage as the buyer, you absolutely have to move the money through the title. Bank of America will not wire her loan to Sterling Escrow or to ABC Escrow. They are only gonna wire to Owner's Title. So the large sums of money, she could deal with the 500 or the smaller amounts. I'm not saying that that is because of their ability or not ability. That's just the way it is. Because in order for us to insure, we have to move the money. Right? So during the real estate recession, there were common ways that title companies got burned. We got defrauded. I don't know if they were intentional, but nonetheless, during the short sale market, it was a shit show. Everybody was busy, half the people didn't know what they were doing. So there were a lot of investors, right? There was no buyer loan, right? A lot of these guys were coming in all cash. They're buying on my property that I'm in default in. We go to an escrow company and you, the buyer, is buying all cash 500. You basically bring the money into escrow. And then with short sales, everything was about timing. Everything was like, there was an expiration date. If you didn't close today, the whole deal's off, right? So we would get pushed to the wall and escrow would say, I'll do the payoff. So they were gonna pay off my defaulted loan. And then guess what? They never paid it. So we're on the hook. Because then we get a call 3 days later from Bank of America, hey, I agreed to this short sale. Where's my $500,000 wire? And escrow company shut down. It took off. Or that was less likely, or because everybody was a shit show and it was so busy, the escrow misbalanced her file. She allowed us to report and close the deal, but she's $75,000 short. We're short $75,000 to pay off Bank of America. We have to pay off Bank of America because we told the buyer that she's gonna get clear title. So that is one of the primary, visual reasons why we're doing the payoff. No one else, because we're on the hook. So a title insurance company, we have all the work that we do on the front end. And then the middle part, it goes kind of quiet. So just kind of the life of an escrow, right? That's 30 days. First few days, there's some work around it. So we're doing the report. And then we issue the report to escrow and the consumers, especially the seller. Whatever needs to get worked through, they're working through it. And then we get crazy busy at the end, right? So it's not that we're not doing anything. We report it, let you know what needs to be done. And then towards the end, we ask you, okay, let's give us all the evidence of what you worked on. It's almost like turning in your homework, right? And then you're gonna get graded for it. If you don't pass, you're not gonna report. So if there are situations where it is a hairy file, I call it. So I review all my prints. I don't contact my clients on all. But if there's anything unusual, anything that I feel that they're gonna miss, I let them know. Because one of the most common things, and it doesn't bother me anymore. I get it, everybody's busy. But escrows will say, agents will say, well, why didn't you tell me? Well, we did tell you. We told you in your report. I didn't come with a blowhorn to your house at 5 a.m. to say your seller has an IRS lien. But I learned, over time that a lot of these things people are not looking at, right? And we're assuming that our sellers are being truthful and forthcoming. And sometimes they are, but sometimes they're not very bright. They just, they think they're gonna go away. So we just have to like basically say, all right, this is what's on your on your property, and these have to get burned down. So at the end of it, once we have all the documentation and all the money, right? Common phrase that you guys will hear in your first few transactions, if you are representing a buyer, you're gonna hear from your buyer's lender or your buyer, our loan is funded. Okay, funded does not mean it's 100%. What funded means, when your bank or when your buyer's lender or your buyer tells you we are funded, that means Bank of America has released that 800,000 and put it into this folder for the benefit of Sonia. It's still with them. It has to fund. They got their money in, earmarked for Sonia, and then they have to wire. So they have to wire this to lawyer's title. We're talking about the buyer's loan, right? That wiring period, there's cutoffs. So I get calls from people that are upset all the time. Well, it funded at 11 o'clock. Why didn't we record? It's like, okay, well, we didn't record because it hit our account, and this is what it gets down to. It hit our account at 2:45. The wire cut off already. That means we saw it at 2:45, but it's sitting in limbo. It's not in our account yet. And for the seller and the buyer, their protection, we can't tell the county record. We can't tell them transfer title, because the moment that the county records it, it is now Sonia's home. It's no longer Carrie's home. And we don't even have the money. Let's say the house burns down. There's no insurance. Let's say that, there was a tree trimming situation going on your next door and the tree falls on the new house. There's no insurance. So that last final, I always say, some of my clients are cool as cucumber. And what I've realized is cool as cucumber versus hair always on fire is managing your client's expectations, right? Whether it's a buyer or a seller. We move at such a fast pace. We're all moving as fast as we can. I wish it wasn't electronic recordings because people have this expectation, right? But there's a course to it, and there's so many people involved. So it funds, title gets the wire from the buyer's bank. Escrow sends us literally a package this big of documents that morning. Good escrows that have a good relationship with us, they've already had my office review what's in here, right? Because my office assumption is, if you're telling me we're gonna record today at 2 o'clock, my assumption is everything is in here. But the not so good escrows or the not so common escrows that we work with, they'll send us this and tell us to record. When they send us this, that's when he opens it up and goes through the entire prelim. Okay, number 17's been done. Number 21's been done. My office checks it off to clear the prelim, right? What if 3 items are missing? Hey, where's the child support lien release? Oh, we didn't know. Well, it's on page 4. Then you can't close.
So doesn't title get that?
Get what?
In your example, all the releases of the payoffs and all that stuff.
Escrow gets it, and then they send it to us. So that's what's put.
So after,
Because escrow works on all the releases, right? The seller gives authorization to escrow to speak to these lien holders on their behalf, including the mortgage, right?
but title pays them off.
We pay them off, but escrow gets the actual releases. We report to you what needs releases. Then escrow goes out and fetches them. So a good escrow, if there's a nasty, nasty prelim, because they don't all come in at the same time, right? So they'll get this, they'll get the IRS release and they'll send it to us and say, hey, this is the release for item number 16. Is it satisfactory? Well, can you release it with this? That's the way it should be done. But there are times where it's not done that way, where they literally, it's a shit file and they send us everything in here and 3 of them are missing. And then they say, well, can we get it later? No, we can't get it later. We promised Sonia that the title is clear. Well, can you hold the seller's money? No, we can't hold the seller's money. Because guess what? Remember that example I used about the IRS? The lien says it's 200,000, but the actual outstanding amount is 285, right? So we can't. We need a release. So we do that. Let's say that this is the perfect package. Then what we do is we audit the file, make sure we have everything, and we release to the county, wherever the property is located. Send it over to the county of Orange, see if please transfer title from Cary to Sonia. So from there, the title company receives, after they release it, the title company receives anywhere from 30 minutes to 5 hours. They get a confirmation recording. When you hear from escrow, we are recorded, we are closed, we are confirmed, it means the same thing. Every now and then I get people that came here from the East Coast and they will say things like, oh no, we didn't record, but we're closed. No, that's not possible. If you're closed, you're recorded. So at that point, the recording that we're responsible for has a timestamp on it. Not only does it say March 20th, it says March 20th at 10:48 a.m. So at 11:15 a.m., if the tree falls on the house, Sonia is now the owner, not Carrie. So that's why the timestamp's there, right? Like if you're gonna get really nitty gritty, and that's why it is imperative. Why, especially with the loan, if you're not getting a loan, nobody may be telling you this, but they're not gonna close unless you have insurance. They're not gonna close. I mean, we've had situations where, you know, cash buyers don't get insurance and literally that tree example is a real example. It was in Big Bear, but it was, you know, 2 neighbors down was cutting down like a 80-foot tree and the thing literally came down on my property.
Before the paperwork.
It happened after the transfer, so it was the new buyer.
It
but
was
the
a
new
cash transaction.
The buyer didn't want insurance because it was too expensive. I mean, it wasn't like an Irvine house price, but it was still like 425,000.
So they lost it.
Yeah.
Oh.
And they were trying to say, you know, the buyer was, it was the same day of closing, right? So the buyer was trying to say, no, that's the seller's responsibility, because they said, we didn't get a call from escrow until 5. It's like, well, escrow's not required. They should let you know what it is, but sometimes we can't let them know immediately. So when we went back to the timestamp, it was literally at 9:30 a.m. that the confirmation happened, right? I mean, it wasn't on purpose. You're just shit out of luck, but that's part of, you know, what takes place. So then it closes, and then the final act of title insurance. Again, going back to, we move the money, right? One of your biggest concerns of all agents, when am I getting paid? Biggest concerns of seller, when am I getting paid? Manage your expectations. I think Coldwell Banker is one of the best offices as far as how quickly you guys get checks, your commission checks. Try for the call. I know who the worst is. I'll tell you guys, never go here because they can take up to 8 days. But they can't cut you a check until, whether it's Sterling escrow or Pickford escrow, gives the money. Escrow can't give the money until we give the money. Right? We can't give the money until we do our final balancing. So going back to the timeline, and this might seem a little tedious, but this is all part of title insurance and where you guys know how to manage your client's expectations. So if we closed at 10:50 a.m., if it's a really good day, your seller should have their money. The seller should have their money. But I would never sell on that. I personally like to set my expectations and deliver better. I would say, as a listing agent, if I knew last week that we were going to record in the morning on Thursday, I would say you should have your money no later than lunchtime on Friday. If the money gets there Thursday night, great, you've exceeded their expectations. I'll tell you why. Yes, we are all working very hard. The lawyer's title, First American title, these recordings happen in batches. Remember what I was telling you, 75 to 125 deals. There is 1 to 2 people per company that moves all the money at time. And they're geniuses. They work extremely hard. You guys have to remember, this is a very, very stressful job. You get 1 digit off, whether it's the bank account number. So they're very intent. They quadruple check, because I've had sellers get pissed off. What the hell? It's so hard about punching in my ADA number or my routing number, right? This is what people think. It's like, no, sir, you don't want people to be moving 1,000,000 miles an hour when they're transferring 2.5 million, right? So once the confirmation comes from the county, my title officer walks this over to the payoff. And she goes through all the files. She sets apart all the money that we have, that we're responsible to pay off, including the lenders, the loan, right? For the old loan for the seller, all the taxes. We have to have it down to the dollar amount. Because we have a ballpark dollar amount, but it's prorated per day, right? And same thing with the liens. Because a lot of times the liens will say, pay us by March 25th, and if we don't get the payment by March 25th, add $76.14 per day. So you have to calculate all of that. We calculate all of that, we balance our file, and we send it to Michelle for our escrow. This is how we balanced it. Does it coincide with yours? Okay, everybody's in line. We take all the money that we need to pay off all the loans and liens, and the balance we send to Michelle. That balance would include your commissions. It would include your seller proceeds. It would most likely include things like termite inspections, because those guys don't invoice to us, they invoice to us. Okay? So Michelle gets, let's say, a check from Lawyer's Title for $929,000. Now she has to spend time with that $929,000 and divvy it up amongst the 6 people she needs to cut checks for or wire to. Typically, the first priority is the seller. But remember, it's 10:50. If she can have all of that done before 2, then there's a chance that the seller can receive the money. But if it's 2:20 or 3 o'clock, the seller's not gonna have them. And I say, if it's a perfect day, if it closed 10 minutes, if recorded 10 minutes ago, I'd be 50-50. Everything would have to be perfectly in line. Everybody needs to be on their A game. And it doesn't make anyone a bad person because they don't make it. It's literally when people say, hey, we're closing this morning. You think I can get my seller their money today? I said, well, if you say we're closing this morning and we get confirmation at 8, yes, absolutely. But if we get confirmation at 10:30, I don't know. Because my gal that's doing the calculations, she probably has 45 files that she's doing this for. She probably has 6, right?
Yeah.
So the reason why I explain that in detail is it is one of the most common reasons why my agents get yelled at by customers. The worst thing that you can do is you got them the highest price. You did so well. You didn't do a ton of repairs. Everything was perfect for your seller, but they will be pissed off. They will write a raging review about how awful you and your services were because you didn't manage expectations. Because of the money. So keep in mind, and this is something, it doesn't have to do with title insurance. It kind of does, but if the transaction, let's say, closes on Friday, I personally, if I was a real estate agent, I would never set up a closing on Friday. I would tell my buyers and sellers, eat a day, because they'll say like, oh, I can't get the moving. I don't want to get moved. I have to work Friday, so I'm going to get the moving. I want to record on Friday so I can move on Saturday. Not worth everyone's. It's going to take years off your life. The reason why Friday always makes me reluctant is the same scenario. Imagine today's Friday, right? There's no tomorrow. Your seller's going to wait till Monday. What if Monday's a holiday? Hello? Right?
Yeah.
This happens all the time, guys. people just, and we have a lot of goofy holidays. Now Caesar Chavez Day, like, nothing, you know, they're just goofy, right? And all the counties are a little different, like this one will take Native America, this one will do Columbus, like they're all a little different. So I always say, coordinate that with escrow, ask me, I'll get you the county dates. But I understand from the seller's perspective, if he wasn't told. We have a dispute going on right now at my office, and this gentleman wants $18,000 from title. His title premium was only $7,000. It was like a $16 million house, right? He was a seller. He was no loan. He didn't get his money on Friday. Monday was a holiday. He got his money on Tuesday. So he wants lawyer's title to pay the interest for Saturday, Sunday, Monday on 16 million. You want someone to pay it. But listen, I don't know. I mean, I would never do that, but I understand if nobody told me. If nobody told me, why would I assume not? Right? If you told me, give me your keys right now, change your utilities, because we're recording on Friday at 11 a.m. My assumption, if nobody told me, my assumption would be, like if I return something on American Express, they tell you it's not going to show up on your credit card for 2 to 3 days. They always tell you that, but you guys don't. I'm not saying you guys, but it's to 90% of the people, they're gonna say, oh, it doesn't matter, of course, they're gonna say that.
Well, you're handing over the keys to their whatever $1 million property and then not get your money today or tomorrow.
That's
Yeah.
scary too.
Yeah, and you wouldn't believe the number of people that forget to tell their clients, right? So this is one of Linda Lawrence's deals. I mean, the guy is like, Chris Aiken literally had to block his number because the guy wants to come and punch him. But it was poorly managed by the listing agent. It was poorly managed by the escrow. They just keep patching over to title because we were the last ones, because the money's in our account, right? I mean, it wasn't even in our account. We pushed it. It's literally sitting in the ACH system to get over. And this was during the last Monday holiday. But again, like if nobody told me, I don't know, I'd be pissed.
So what would you recommend like the ideal day of the week to close, like on Wednesday? Just to give you that extra cushion?
Yeah. And the reason why I say that, it's not just for the closing guys, it's for everyone. It's for your lenders too. At the funding houses, it's a shit show on Friday.
Everybody wants to leave early or on vacation.
Yep, and because everybody's trying to close on Friday, right? So I just much rather say, okay, they got all their things done for Monday, they got caught up on Tuesday, and Wednesday or Thursday. Wednesday is the perfect day in my opinion. Like that's when I always close, when I bought or sold. And people always look like, how did you do that? You're wasting 2 days of mortgage, or like, it doesn't matter. Like my lifespan is more important to me.
Is there wiggle room with that? Where you can fit that, like say.
Well,
on
instead of
Wednesday on the
saying,
calendar?
instead of saying it's a 30-day escrow, it might be a 28-day escrow.
Or
Right,
32
right, or
days?
32 days,
Or, yeah.
right.
It's okay.
Yeah.
Okay.
Right, I think so. I mean, people do that, and I think it just, and you explain that to your client, you have to explain it to them. And guess what? If they've had more than one transaction, that's really gonna be thought provoking for them. They're gonna be like, wow, she's really thorough. Nobody's ever told me that.
Well, and then like when you're going back and forth with counters and then you're losing days, you might have to like reiterate that.
Yep.
To the other agent, say, hey, we'd like to close on a Wednesday, whatever that day's gonna be that next week.
Yep, and as a buyer or a seller, the other side could give you pushback. Then you gotta draw up the scenario for that. Say, listen, like, I just, I think this is so much better for everyone. There's so many things going on, so many moving parts. Sorry, guys.
So you can tell them it's gonna close in 33 days, but really close on 30 and give them 3 days wiggle room.
No, I wouldn't, I think the other side agent would be upset about that.
Okay,
You
so
would,
just do a Wednesday.
yeah, figure out the day and count the days, right? I think that would be better than giving the wiggle room and then changing it last minute, because, every side has a situation, every side has a story, right? Someone could be saying like, no, because they're packing up and they're flying, they're moving to Tennessee and they're booking their flight for the 30th, why didn't you tell me? Yeah, and that's the other thing, I would never close month end. I would never close month end, so it's interesting, over my years of business, so many of my clients have heard this. So actually, like month end is crazy for me, but it's always my crappy files that close month end. A majority of my closings happen the third week of the month or the first week of the month, not the last week of the month. Because most of my clients, like, they know.
Yeah, there's too much at the end of the month.
For everyone.
Let's have to do reports and stuff like that. And
Yeah, but it's not just escrow, it's not just title, it's everyone. It's the homeowner's insurance, it is the termite companies, it's everyone, right? Yeah, so it's just better to do it when, just when everyone else is not in there. Yeah. Well, hopefully you guys found that to be informative.
It was good.
Good.
Any questions? Does anybody have any questions?
That was
It's
really good. Thank
30
you.
calendar days, right, for escrow? Or
Yes,
30 business days?
30 calendars. Yeah, business days is only for the deposit.
You could take up to 4 to 5 days.
Well, it depends on what you agree to. It could be, when you submit your offer, it could be, you're asking for a 30-day close, or a 45-day close, or 60-day. Yeah, so typically it's 30 days.
So before you go into escrow, you say, we want to aim for 33 days of escrow.
You can,
Just
so
to aim
you
to
can
go
say
to close
that,
on a Wednesday.
yeah, you could say that depending on, you can call the other agent and say, hey, if we send this to you, like if you're on encounters, do you think you can get your buyers, your seller to agree to close on this date? So if we put 33-day escrow or 29-day escrow, because we wanted to close on a specific day. And then everybody signs, you agree to it, and then now that'll be the closing date. Or you can always write an addendum, like while you're in the transaction early on, say, hey, look at the calendar, even if everybody agreed to 30 days, say, hey, my buyer would like to close on this day, or my seller would like to close on this day. Can you check with your client to see if that's okay? And when it's early on, it's gonna be fine, right? But when it's later on, when you're at the end, and then you need 2 more days, or you wanna take, they might not agree to that. Sometimes they'll agree to close earlier. So if you're scheduled to close on Friday and you want to close earlier, like on Wednesday, they might agree to it. But if you want to extend it, they might not agree to, especially later on in the transaction.
So wouldn't that be the same case? So like, if say you close on Wednesday, the 30th, right?
Yeah.
30th day is Wednesday.
Yeah.
And they're behind, and now it doesn't close until the 35th day, which is Friday, which is a better day because you.
If something happens and then it has to be pushed off for whatever
I
reason.
guess before the weekend always better.
Yeah, but like Mary's saying, not for the seller, because if it doesn't close that morning, it closes in the afternoon, and then the seller's not gonna get their money until Monday.
Yeah.
And that they can be upset about that, but
That's
things
why-
happen,
Yeah,
but if you schedule it to close on a specific day, Wednesday, like she's suggesting, then hopefully if everything goes as planned, it's gonna close that day. But then you can't control anything that happens beyond that, right? Just like you can't control if it closes on Friday, that it doesn't close earlier on Friday, where they're gonna be able to get their money that day.
right.
So
I guess Wednesday would be a better day because,
you have 2 days cushion in case something happens.
yeah, because if it's on a Friday and they get busy, then nothing happens, and then Monday's a holiday, now it doesn't happen until Tuesday or Wednesday.
Harriet, Summer, do you guys have any questions? I know Mary's not here yet, but so that way, if you do, I can wait for her. If not, I can just close it out here.
You can close it out.
Okay, all right, I'll see you guys next week.
Bye.